Well, location does play a huge role, especially if you're in a high traffic or a high claim area. But you can't change where you are. You can control how you operate.
John, thanks so much for coming to the Duet NEMT Growth podcast. I'm really excited to have you here. Like for everyone watching, John is a real insurance expert in NEMT, and he runs the whole gamut from any state you're in. John can talk to you about insurance. He writes policies for one vehicle fleets, 50 vehicle fleets. John, like how big do you go?
Yeah. Well, I like doing the one units. Those are like my bread and butter because I feel like those are the real chance I can help people,
Mhm.
and we can really form you into uh, a good long-term NEMT operator. But my biggest account, I believe, has 68 vehicles.
Yeah, nice.
So yeah, there's no really ceiling there. It's just you know, we've kind of seen it all. So everything in between.
That's awesome. So just to, for the purposes of introduction, I'm the co-founder of Duet. Our mission is to help NEMT services grow. And we do that primarily through our dispatching software, but also have some other, add-on services. So talk to me if you're interested. But I want to really focus on John and on the insurance market today. John, maybe you could give us a little introduction about yourself. Like, how did you end up in NEMT insurance?
Yeah, it's funny. I kind of just fell into NEMT. Um, I started working with a few NEMT operators, and I guess I just realized pretty quickly it wasn't the same as like standard commercial auto. Um, there's just a lot of nuance, and there was not really a lot of people that specialized in it. Uh, so I just leaned into it. And I just started building relationships with the right carriers. And obviously now it's just become a big part of what I do. And I've really enjoyed it too. It doesn't even feel like working.
That's great. That's kind of how I feel every day.
It's
Um,
great. I mean, if well, there's a saying to that, right? If you love what you do, you never have to work a day in your life. I think
exactly.
there's some truth to that.
Yeah, yeah. And so you're at James G. Parker Insurance, if I remember right.
Mhm.
Um, and you write policies across all 50 states. So would love to just get a high level sense, like, is it very different in, state to state?
Yeah, that's a great question, and it comes up quite a bit. And there are definitely some state-specific differences, especially around like regulations, which carriers are competitive and where. Obviously, some carriers only write in some states, right? But overall, the challenges are pretty consistent. It mostly comes down to claims, your fleet, how your operation is run, and things of that sort. But definitely there are state-specific differences for sure. Um,
Yeah, and I'm happy to get into particular states at the Q&A
yeah,
if people are interested.
yeah,
So we've got a lot on the plate to cover today, so I'll try to
yeah.
keep things moving. We're going to talk about deductibles, claims, cameras, renewal strategy. Um, But the title of this talk is like, number one reason your rates are going up. Could you talk to us about what the most important number is in, NEMT insurance and sort of how that works on both like the individual and the market level?
Yeah, yeah. It's your loss ratio. That's the number one thing, right? And I can kind of dig into that a little bit later if we need to, what that really is. But that number controls everything. It impacts pricing, which carriers are willing to quote you, and whether your rates will go up or down. So uh, the answer there is loss ratio.
And what is the loss ratio for anyone who's new?
Yeah, so it's basically your premium over whatever span of time divided by your losses or your claims, and specifically your claim reserves, or total incurred. And then that gives you a percentage of what that is. And generally, uh, under 40-ish% is strong. And that's not something that you really need to uh, know that percentage off the top of your head. We can look at everything and kind of get that number for you. Once you start getting above that 40-ish% loss ratio, the carriers start getting cautious. And that's when you start seeing pricing increases, carriers pulling out, and overall just fewer options.
Yeah, and just, I want this to be mostly sort of focused on more advanced topics, really going deeper into insurance. But could you walk us through, for anyone new, to sort of what kind of insurance do you need to have to even like get going in NEMT?
Yeah, no, that's a great question. So it's a two-part question because you have state regulations, right? And you have contractual and per your state regulations, you'll have to have typically auto liability. And so you typically don't need, per the state regulations, like general liability, professional liability, SAM coverage, even auto physical damage, a lot of times is a contractual requirement. So, but per contract, you're going to want to have all those, especially if your car is financed, right? You're going to want to have comp collision. That's going to be one of the requirements. And then those other coverages like general liability are going to cover you for things that happen outside of your car, especially if you're doing like wheelchair, stretcher type transports. Incidents just don't happen inside your vans. They can happen anywhere. And that's where general liability comes into play.
Yeah, that's a great overview. So let's dive right in. Let's start talking about sort of what drives the premium, especially in terms of what you can control. So I want to ask, like, when an underwriter looks at a new NEMT account, what are the big things that are actually going to drive that premium?
Yeah. No, like I mentioned, first thing is always going to be your loss history and your loss ratio, like I mentioned. Second, it's going to be your fleet type, right? Whether you're doing ambies, wheelchairs, stretchers, where you operate, your territory is going to be big at where underwriters look at, or what underwriters look at. How well the account is presented. So they just don't want to see, hey, here's a submission. I'm not going to tell you anything else. Here's loss runs, vehicle list. Figure it out on your own, right? They're going to want some sort of narrative. At the end of the day, these underwriters are just trying to understand how risky you are, honestly.
And does the risk change a lot from ambi to wheelchair to stretcher?
It does because there's more of a handling exposure, right? You're more hands-on with those type of transports. So yes, the risk does go up and they have to charge the appropriate premium.
Do you have a rule of thumb for like how much insurance should be for like an ambi versus, a wheelchair vehicle that's doing the same route?
So there is no set amount because there's just so many variables. I think obviously wheelchair and stretcher are going to be your highest risk, right? So
Right.
they're going to cost the most. Your ambulatory is going to be cheaper. Like I mentioned, just the more hands-on you are with the trip, helping someone in and out of the car, securing them, all that stuff just creates more chances that something's going to happen, and the carrier has to, charge a little bit more premium for those type of transports.
And you touched on territory there. Um, if you're operating kind of a high litigation area or like a metro area with more vehicles, more traffic, more risk exposure, is there anything providers can do to offset that, or are you just kind of stuck with the geography you're in?
Yeah. Well, location does play a huge role, right? And especially if you're in a high traffic or a high claim area, right? But you can't change where you are. You can control how you operate. Fewer claims, better safety, and I'm a big believer in cameras. I just believe cameras can go a long, long way. But location does play a huge role.
Yeah. And I have a whole section on cameras later on that I want to ask you about. So
Yeah.
thought. So next up, I wanted to cover like, the submission narrative. And you talked about don't just shove a pile of data at the insurance and tell them to go away. Like tell a story about why you're a low risk provider that shouldn't have super high rates. What actually needs to go into a strong like submission narrative?
Yeah. No, that's a great question because honestly, typically a lot of people just send loss runs, vehicle list, driver's lists, and we call it kind of quote and pray for the best, right? Um, what I try to do personally, is like you said, tell the full story, right? How the business runs, what safety steps are in place, uh, what's improved over time with the business. Uh, the goal is essentially to make the insurance company feel comfortable taking you on as a client. Because if they don't, ultimately they will decline to quote, and we don't want.
What kinds of things have you seen like most move the needle there? Like, is it a handbook about the safety steps you're taking? Is it like here's some information about my driver training protocol?
Yeah, so all those things will move the needle. I think the most important thing is then to look at your claim, the totality of the circumstances with your claims, right? They're looking at your claims with a fine-tooth comb. They want to know everything about them. And if we can get in front of that, that's huge. So getting in front of your claims, they will look at all the stuff that you've implemented uh, and possibly look at and see if that is grounds for some sort of discount. But ultimately, they're wanting to see that that stuff has made a difference over time, not just it's been implemented for a short amount of time. We're kind of seeing how it works.
So is that you start the program now and they see, oh, 6 months later there's been a reduction in claims or something?
Yeah, that definitely helps. But yeah, it's over time. Things have been implemented and the claims have gone down. All this stuff is fluid, right?
Mhm.
There's no like rule book to say, hey, this is going to get you X amount of
Right.
discount. Um,
I wish.
sometimes cameras will get you, 1 to 2% of a discount. There is some standardized discounts for stuff like that. Um, but the value there for stuff like that is way more than what the insurance can gives you up.
And Tayo had a good question. At what stage do you get the information of the safety things you do? Is it during initial quote or during renewal?
So it's up front. The more information they have up front, the better. So if we can somehow build a submission, especially if you're a brand new business, then we're going to try to let them know what you're going to implement. But if you've been in business for some amount of time, uh, then we have to just let them know what you've done over time, um, and and let them know what you've implemented and how it's worked.
Is there anything that, like, if you had like a short checklist of things you would want to include that might not be obvious, what would be on that checklist?
So I think you really want to stay organized throughout the year.
Hmm.
Your driver records, training, maintenance on the vehicles, your claims. I think a huge thing that is sometimes overlooked is route notes. Putting in notes after every call, even if everything went perfect, after every transport, even if everything went perfect, because it tells a story on how your operation is ran day to day. And if something ends up coming up for 6 months down the line, somebody says, hey, I was transported by this vehicle, this driver, and X happened. You can go back and you can say, well, I looked at the notes and we don't have any record of that. Or we do have a record of that, and let's figure it out. Let's see what actually happened, right? So route notes are, I know I said it as one of my last things, but I think they're seriously one of the most important things.
Yeah, that's a great point. Like, we have some Duet customers who their drivers kind of religiously enter in, like, after every route, they're going in their mobile
Yeah,
app, they're writing down, hey, this was details of the transport, it all went well, or had this problem. But a lot of drivers don't want to bother with that. So I can see the appeal of like actually putting a little friendly nudge on them from the admin to make that happen.
sure, especially from a claim standpoint, right? Because most claims don't get reported right when it happens. Sometimes it
Right.
comes out
Yep.
months later, and if you don't have notes, then we are left with our memories, which sometimes are not a very good indication of what actually happened.
Yeah, that's tough. And then suppose you do have a bad claims year. You did have an accident, some issues. How do you frame that when you're going up for a renewal?
Yeah. So what you want to do is you don't want to focus on that claim and say, hey, the claim was, it was false or whatever it might be,
Mhm.
this didn't happen. You want to say, hey, look, we addressed it and here's what we're doing moving forward, right? The carriers, it's kind of what I've noticed over time. They don't want to hear, and not to say everything's an excuse or a justification, right? But they typically don't want to hear a lot of that. They want to hear what happened and how you've gotten better from it since. And that's the best way to come out of the claims, because stuff happens and stuff's going to happen that's outside of your control. Um, and it's just growing from those situations and getting better.
So, taking a quick step back here, could you tell us about the difference between like a broker and a carrier, and like, how you fit into that ecosystem, and like, how those roles work?
Yeah, yeah. So as a broker, I don't work for an insurance company. I work for multiple insurance companies that we have appointments with. A good analogy I could provide is I'm a contractor, right? I'm a contractor for the insurance companies, and I contract with multiple of them, and we're able to have multiple appointments with multiple NEMT insurance companies because over time we've built relationships and we've placed business with them, um, and so, yeah, the difference is we don't actually have the pen. We don't write the contracts per se. We gather the information, bundle it all up, give it to the insurance underwriters, and work with them on getting a policy.
And I understand you have a relatively close relationship with the carriers you work with. Can you talk to me about the difference between like someone who has a broker that does have a relationship with the carriers versus someone that's just submitting in, 10 different portals?
Yeah, no, that's a great question. I honestly ask that question a lot of times when I'm first talking to new clients, right? Because honestly, it definitely matters. It's just like anything. If somebody or the insurance company is familiar with a broker or agency that a submission is coming from, there's already a level of trust there, right? So things tend to move a little bit faster and smoother. Not that insurance moves fast, but it just seems to move a little bit faster and smoother. If not, if they don't know you, they tend to dig a little bit. They don't know who the submission is coming from. Right? They've never seen your name before. They've never seen your agency, or maybe it's a small number of submissions they've seen. So they dig a little bit more. There might be more underwriting questions. There might be more skepticism on the side of the insurance underwriters. And NEMT it's a niche space, right? And I truly believe that having someone who knows the carriers is going to make a big difference. I don't dabble into construction or some of these other lines because I don't know them. I give them to the professionals or they'll co-work them with someone. And that's how I feel about insurance. You just have to specialize in it so you know the industry, you know the markets, so you can keep up the trends.
Yeah, it's not an easy NEMT insurance is not an easy or simple market.
No, it's not.
So let's talk about deductibles and self-insured excess policies, like this kind of category of work. I'm curious when you think having a higher deductible or raising your deductible would make sense versus when does that backfire?
Yeah. So there's an inverse relationship between your premium and your deductible, right? And not as much as people might think, but it makes sense to have a higher deductible when you have the cash flow to absorb the smaller claims, right? And you want to lower your fixed premium. And that amount isn't the same every time. Like going from a $2,500 deductible to say a $5,000 deductible doesn't change your premium the same with every single carrier. And some carriers don't even offer that, right? I think where it backfires is when you're trying to save money, but haven't budgeted for the handling of that said loss, right? I think you really have to play devil's advocate with the deductibles, right? Because one claim can wipe out everything you've saved, right? They offer anywhere from I've seen $1,000 deductibles, which is pretty standard, and I've seen $50,000 deductibles. Um, and there's a huge premium decrease, but with that comes something called collateral. And if you raise your deductible high enough, they want collateral up front. And I can go more into that later, but that is money set aside uh, from you to the insurance company to pay for losses. That is your money. If you don't have any losses, you get that money back, but it's technically set aside in like an impound account.
Interesting. I'm curious, is that something you recommend to people? Is that something commonly used?
It is so it can be. I've written a few collateral based high deductible accounts, and the ones that use them, uh, the, the grass isn't always greener, right? But it does lower the premium up front. But if there is a claim, it does hurt a little bit. Um, Essentially, the money that you put aside for the collateral is yours, but if you have a claim, it gets used to pay for the deductible. So you really have to know what you're getting into, and it's definitely a strategy that you should talk to a broker about. and figure out if it's right for you. Because if you don't play devil's advocate with you and you have something that happens or have multiple things that happen, it can wipe out a lot of cash flow quick.
Yeah, at that $50,000.
Yeah.
So, how about the difference between like a standard deductible and like self-insured retention? When, if ever, do you think it makes sense to start thinking about self-insured retention and like what size of service, vehicles, trips, whatever?
Yeah, so we usually see SIRs, self-insured retentions, on the professional lines of coverage, like general liability, professional liability, and like a SAM type coverage. We might see it on like an EPLI type policy, which is employers practices liability insurance, which covers like employees trying to sue their employers. Um, so yeah, basically a deductible means the carrier handling the claim, or sorry, they handle the claim and then they basically you reimburse them, right? They handle the claim for you, then you have $1,000 deductible that you pay the carrier back. With an SIR, you're handling and paying that claim. You're handling and paying that SIR first. And SIRs are usually in reference to like we see like $25,000 up SIRs, right? Those are usually what we see in SIRs. They usually make sense for larger, more established operators with the resources to manage that risk, right? $25,000 is a high self-insured retention, right? And self-insured retentions come with a lot of things. Like sometimes they just refer to defense costs. Sometimes they refer to the claim. You have to really look at the contract and figure out what it covers you because you don't want to be buying something that looks good on paper, but the fine print tells a different story.
Yeah. So, for providers who need, 3 million or 5 million in coverage because of, broker requirements,
Mm-hmm.
walk us through like how layering a primary policy, with an excess policy or an umbrella policy works.
Yeah. So you have your primary layer. Say you have like $1 million in auto liability, which is very standard for
Hmm.
NEMT. Your excess sits on top of that, right? So you might have a $5 million excess auto liability. Um, I think where people end up overpaying is when the structure of that just isn't optimized, uh, or you don't really need it, right? Sometimes people want excess policies because they feel like they're going to get sued for whatever amount. But typically, I don't want to throw out percentages, but uh, usually when attorneys get a hold of these claims, they usually the first thing they ask is, let's see a certificate of insurance and let's see what limits they have, right? And they sue up to the limits or below the limits. And if you have an excess policy, they're just going to sue up to your excess limits. So it's going to be more that you're sued for, right? So, but I think a common misconception in the insurance world and NEMT, people use excess and umbrella interchangeably. And those are two, they follow the same lines and then they split off, right? An umbrella policy is very, very, very broad, and an excess follows a certain line of insurance. Typically for NEMT, you're going to need an excess policy versus an umbrella.
That's a good point. So, how does the actual cost of going from 1 to 5, like I totally hear you, it's often not a good idea, but suppose you have to have a 5 million policy because of the broker you're working with or the health system you're working with requires it. What's like the least expensive way to get from, 1 to 5 million?
Yeah. So it comes down to like if you want to get a $5 million policy, you're going to be looking at, I don't want to throw out numbers because I'm
Uh-huh.
not an underwriter, right? But say your premium is $10,000. I'm just going to throw out round numbers. For every $1 million, you might see a 20% increase in premium. So 20% each $1 million, right? So $5 million could get expensive real quick, depending on the carrier. But I think it really comes down to how they view your risk, right? Obviously, if you're clean, you have clean loss history, more carriers are going to be able to become available to keep your costs down. The better you look, basically, the cheaper your insurance is going to be, and the better pricing you're going to get.
Yeah. And speaking of, how to keep your insurance costs down, I want to ask you a couple questions about how to, mistakes people make that you see that are, raising their NEMT insurance rates. So first question would be, open loss reserves. Could you tell us a little bit about what those are and like why a provider should care about a claim that's like technically open, even if it's a minor claim?
Yeah, no, that's a good question because when you get your loss runs or your claims history, uh, you're going to see a lot of stuff on the page, and it's going to be incurred, expense paid, loss. It's going to have all these numbers, and some of the numbers are going to look really high, even though there's just a fender bender, or even though somebody just stubbed their toe, or whatever it might be. So it's very important to know what a loss reserve is because it technically can get used against you for rates. And a loss reserve is basically money that's set aside for open claims, right? Very easy. Um, Even if the claim seems small, right? It counts against you and affects your loss ratio. Um, you want to communicate with your adjuster appropriately, right? When there's a claim that comes in, the adjuster's going to get it and say, okay, this person stubbed their toe. How much money should we set aside for this claim? Based on all the other claims that we've seen like this in the past. And a simple claim that you might think they're going to pay $3,000 for, they might set $50,000 aside. And until that claim is closed, that $50,000 is going to get used against you in that thing that we call loss ratio. So it's very important to get that honed in and get work to a resolution with the adjuster, with your broker, with your claims team to get claims closed and paid.
And is that a place you can push back and say, no, this 50,000 is too high? Or is that a losing battle and you just want to close it as quickly as possible?
It can be a losing battle depending on what kind of documentation you have, right? You're going to have something in writing from a source saying, hey, no, this amount is too much and here's why, right? And that's going to be dependent on the circumstances, and that's something that we can definitely strategize on and figure it out. But we personally at our agency, we have a team of about 5 that handles claims, and that's exactly what they do. They push back against the insurance companies, right? And work to get claims closed, work to get loss reserves lowered, work to get those things that matter in the background that really no one sees, right? And then they see their claim go away and they're like, wow, that went away pretty quick. But stuff's been silently going on in the background. So, yes, you can, to answer your question, you can influence it, but it does take a little bit of work and expertise.
I'm learning all kinds of like cool things that brokers do in the insurance industry. This is
A lot
fascinating.
of people think we just go out and get a price, get a quote, and give it to. There's a lot of stuff that
Yeah.
goes on in the background with us. Just kind of some stuff's on autopilot, some stuff isn't. But yeah, there's a lot to it.
So I want to talk to you about slow reporting. So what's the issue if you get an offender bender and you wait 2 weeks to report it?
Yeah. Well, typically in insurance contracts, when you get your insurance policy, most people see the certificate of insurance and their ID cards, right? You're going to get this big 150-page document that's emailed to you in a PDF that most people don't read, right? You just don't, right? It's just a lot of insurance jargon. And most of it, what that says in there, one part of it will say, basically, you have the duty to let your insurance carrier know as soon as you're involved in a claim, something to that effect, right? And so you have the duty to report the claim as soon as it happens, so that the insurance company has a duty like the insurance company has a duty to defend you, right? Um, so late reporting usually leads to higher reserves and just worse outcomes. Um, that's basically what it comes down to, right? We say get these things reported as soon as possible. Obviously, if you ran into a curb, it's just you as the business owner and you have a little dent on your car and you want to fix it yourself, that's one thing. But if you have a passenger in the car, if you have a third party, always report it. You just don't know what's going to happen, right? Everybody could be fine, but everybody's driven down every freeway in the United States and seen billboard attorneys,
Right.
and they will take your calls and they will take your case,
Yeah.
and they know you have commercial insurance. So report those things as soon as you can. It's important.
So suppose you do have a big claim against you, whether it's your fault or not. Um, is that a process that like you as a broker or your clients should push back on? Like, no, this is too high a claim for what happened, or is that just the cost of working with insurance?
And you're referring to like the reserve set aside, like
Yeah,
that?
but with the reserve and also like an actual claim that comes through. Like, you're like, why am I why did my insurance pay out $50,000 for the stubbed toe? Like, is that going to hurt me long term? Do you
Yeah,
have any power there, or you're sort of left at the whims of the carrier?
I'll be honest with you. You have a very small amount of power because when you get insurance, another part of the contract is, like I mentioned before, they have a duty to defend you, right?
Mm,
And they don't have anywhere in the contract where it says they have to consult with you before.
hmm
So obviously, the insurance companies are in the business of making money too, right? They don't want to pay $1 million for some a passenger that stubbed his toe getting into the car, right? But they also don't want to have it litigated in court. They want to settle. Insurance companies want to settle, right? They don't want to go to court. It's a lot of time. It's expensive to go to court, and then everything's in the hands of a jury, which you just never know what can happen. So they want to settle. Um, so yes, you don't really have a lot of say in it because you pass off that duty to defend to your insurance company, and they will do what they see fit in the most efficient way possible. Um, but it's worth talking about. It's definitely worth talking about. If somebody stubs their toe and they're paying out an exorbitant amount, it's worth an explanation, right? And the client deserves that.
Yeah. And I think we touched on this briefly, but in the period in between renewals, quarterly, annually, whatever, um, maybe monthly, what should providers be thinking about doing to sort of prepare themselves for getting a cheaper renewal?
I think it's staying proactive, right?
Mm,
It's reviewing your claims regularly. Know what's going on with your claims, right? It's very important. Stay involved in the process because that has everything to do with your rates. Um, don't wait till the last minute to start thinking about your renewal. Start thinking about that 3, 4 months out, right? Um, there's a lot of information to gather, right? You got your loss history, you got your loss runs, you got vehicle list, driver's list, you got all the underwriting questions that come with that. You just don't want to be caught off guard. So not waiting till the last minute and reviewing stuff regularly can help you have a better out.
makes sense. And we've got a couple questions to get through. First, Jing asks, is usage-based insurance being adopted in NEMT?
It is. It is. And it's a love-hate relationship. We have a carrier that writes, and if you've heard of them, LEEO, they're basically rebranded Fairmatic, which is out of
Oh yeah. Yep.
San Francisco, or at least East Bay, or at least
Yeah, we
some
know.
650 area code. Yeah, right. Anyways, yes, and what we've noticed with them is it's you either love them or you hate them. And I think the most important with usage base is being honest on the applications, right? And not because what they're going to do is they're going to put beacons in your car and they're going to track your mileage, how hard you're braking, you're accelerating, you're turning, every uh, every statistic that they could take, they're going to, and they're going to adjust your premium on a fluid basis. And if you've been totally honest about your operations, then your pricing should be consistent with that. A lot of times we'll see people that, for some reason, the brokers will lowball the mileage, um, and then the carriers will have no idea what's going on with their driving habits, and they will see, I'm just going to throw out random numbers. There'll be a quoted $50,000 premium for their 5 vehicles, right? But they'll get their bill every month and it will reflect an annual premium of $100,000. And that's because the numbers were kind of fudged, right? So I think it can be good. Just know what you're getting yourself into. Work with the broker, be honest with them, tell them to report everything accurate, and review the applications that they submit. Right? A lot of times you're sent a DocuSign, you just kind of sign everywhere, and not anybody in particular. Just that's what happens, right? You get a DocuSign, insert all.
Yep.
Not many people look at it, and then it gets sent off. You get your quote, it looks good, and then you get your bill, and you're like, this isn't what I was quoted. So just being proactive and reviewing everything. Sorry, that was a long answer to
No,
your
that's
basic
that's a
question.
good point. That's a good point. Tayo also had a question. She says, Florida is a no-fault state. What can I do or say to the insurance to not raise my premium if it's not my fault? Yeah.
Yeah, um, they're a no fault state, so yeah, I don't have a good answer for you there. I'm sorry.
move to a different state. I don't know.
Yeah. Florida's tough. That's why rates are so high in Florida. I've worked with several Florida operators, and it's
Mm.
very, very difficult because they're no fault status. And there's several other states like that, and that's why you have to have certain other coverages like PIP coverage, right? In states like that. So I'm sorry, I don't have a satisfactory answer for that. It's go to Texas.
Yeah, good idea. So you had talked earlier about dash cams and telematics and some of this stuff, and while we're on the subject of usage-based insurance, that ties in nicely. How much of a like actual discount are you looking at if you put in dash cams and you start recording everything in your NEMT?
Yeah. So upfront, some carriers do give discounts for cameras, interior, exterior facing, um, and it's going to be very minimal, right? One, two, I've seen 3%. It seems the number is fixed depending on which carrier you end up going with. Um, but I really think the real value in cameras is how they improve claim outcomes, right? Because a lot of times in a claim, James, if me and you get in a little fender bender and we don't have cameras, it's your word versus mine and maybe some witnesses that stuck around, right? No one knows what happened. And if you live in if not in Florida, but if you live in a comparative fault, so I'm just talking about California, right? Comparative fault state, and the adjuster can't figure out what happened, right? And I'm saying that, you clearly rear-ended me or I clearly rear-ended you. The insurance company still can put a little bit of blame on the person that was rear-ended, even they were just sitting there. I've seen them give 5, 10, 15% fault to people that weren't doing anything wrong just because they can't make a good determination, right? And this goes for comparative fault states like California. So cameras get rid of all that, right? It's not, okay, it's he said, she said, but let's look at what actually happened, right? With the cameras. The cameras tell a story. So yes, they do save you a little bit, a couple $100, maybe $1,000, but they're really going to save you when that time comes for
Yeah.
the claim and they set the reserves aside.
Yeah, no, I'll echo you there. Like, I want to highlight the importance of the interior camera. Like, you might not think it's important, but then, somebody will sue you. Like, "Oh, the driver said a racial slur to me, or, did this or that." And, again, there's no way to verify that unless you have a camera that's like recording video, recording audio if possible.
Hmm. Yeah, it tells the story. It's like, hey, instead of hearing what I said, let me just show you the camera footage, right?
Mhm.
So the more documentation you can have, and it being clear, right,
Mhm.
um, is huge.
Yeah, and Ray, I'll get to your question in a second, but want to ask, like, is there a minimum setup that you would recommend in terms of like, forward-facing dual cam? Do you think GPS telematics are important? What would you recommend to people?
I think it's all important. Honestly, I think the minimum that every vehicle should have is dual facing cameras. I think that's the minimum, right? The more data you have, the better. Honestly, I don't understand why car manufacturers today, especially in litigious states, don't make car manufacturers have at least the option for cameras inside the car, right? Make it an option. You
Yeah.
want the chrome wheels, you want the 24. No, make it an option to have cameras because a lot of times it's kind of a pain, right? Sometimes they plug into the cigarette lighters or a USB, but a lot of times people are running them through, and you got to get it professionally installed. I've always asked the question, why aren't car manufacturers installing these things from the factory and giving people the option to activate them like OnStar or whatever the case might be.
Yeah.
Or maybe they do already have it. I don't know about it.
If anyone knows about that, reach out to one of us and let us know.
Yes, please.
Um, so let's see. Yeah, and do you have a sense of like I mean, I realize it can be expensive to do all this. What do you look at in terms of payback period for installing like, dual facing cameras in your vehicle?
When you mean payback period, you mean like how much, like when do they pay for themselves?
Yeah.
The first time a claim happens. The
Mm.
first time a claim happens. Obviously, unless you're 100% at fault, that
Yeah.
But a lot of time, most of the time in a claims, it's he said, she said, right? A lot of times it's going to be, uh, uh, you know, the involved party and the claimant, right?
Mhm.
I believe the truth is sometimes somewhere in the middle. right? And the cameras are where the truth is. So the first time a claim happens is when you're going to get your payback because your reserves are going to reflect it, your lost payouts are going to reflect it, and if you have to pay, I don't know what it is, say $100 a month per camera or whatever the case might be, right? But you avoided $100,000 loss reserve, then you won, right? So the payouts can be instant.
So let's get to Ray's question. Ray's curious, would having customers sign a waiver where they acknowledge and assume the risk of things like road conditions, uneven surfaces, potholes, and smoothness of ride, um, you know, does that sort of waiver protect him? Does that reduce liability in any meaningful way?
Having a third party sign it, I'm just going to assume for the sake of this question, it's like a third party, like a person that you're transporting sign that.
Yeah.
Um, Typically those things don't hold up in court, right? I've gone down that road with NEMT operators because I have seen lawsuits come up for operators going over potholes,
Yeah,
and
same.
yeah. So, but typically they don't hold up in court. They look good on face value, but when the attorneys get a hold of them, they just don't hold up. I don't think it would hurt, but I'm just speaking right now for California, and I think for California, I don't think they have a ton of merit.
Like in North Carolina, any merit there that you know of?
Yeah, I would say not there either,
Okay.
based on what I've seen. Um, I'm trying to think of some states that it might maybe like a Texas, maybe Utah, because their laws are a little bit different. Um, uh, but North Carolina, no, I couldn't see that holding up. Um, like I said, it certainly wouldn't hurt you, but it might look. I guess optics matter too, right? How that looks to the passenger is something that definitely take into consideration having them sign a waiver. Um, you know,
Cool. Well, let's talk about renewal strategy. What do you feel like is the ideal renewal timeline? Like, I know I've talked to you before about how it's really important to prepare ahead of time and not just try to do everything at the last minute. Um, how far in advance should people be thinking about it?
yeah. Um, Definitely not the week of your renewal. Um, 90 to 120 days out is the right answer, right? Honestly, the earlier you start, the more options that are going to be in front of you. I've done last minute proposals where I've got information the day they renew, right? But it's rare. Uh, if we're doing a renewal, it's 90 to 120 days out. We start reaching out, asking for information, start getting as much as we can from the client so we can start building that submission. It just depends on what carrier they're with too. Sometimes, uh, based on our expertise, we believe renewing is the best option. A lot of times we believe marketing it out is the best option. Sometimes we believe renewing it and sending that renewal to all the other markets is the best option. There's just a lot of strategies when it comes to renewal. Um, but yeah, getting ahead of that about 3 to 4 months in advance is huge.
So if I'm thinking about, shopping around, trying to get the best price, my first instinct is always like, oh, let me talk to like a couple of different, in this case, brokers to figure out who can get me the best quote.
Mhm.
But, you've been vocal about why that doesn't necessarily apply in the NMT commercial insurance space. Could you
Yeah.
talk to me about like what happens if I go and I talk to, three different brokers and they're all submitting claims to sometimes the same carriers?
Yeah. Yeah. So if you're getting submissions, if a carrier is getting submissions from a bunch of different brokers, they're going to take the first submission that they get, and then the market's blocked. So which means blocked is any other broker that comes in and tries to get a quote. This goes for 95% of the carriers. There's a few that accept multiple submissions, but they're going to say, nope, we already have a submission. You're blocked. That's exactly what they're going to say. They're not going to say who it's from. They're not going to say anything else. They're just going to say you're blocked. They'll only work with like I said, for 95% of the accounts, only work with one broker per account. I really think that if a carrier is getting multiple submissions from multiple agents, they tend to look at those things unfavorably. And that's just from kind of talking to underwriters throughout the years. I've actually seen carriers pull out and they said, you know what? We want them to figure out who they want to work with first. and then we'll accept a submission. We're not going to be dealing with 20 different brokers or whatever the case might be, right? And I think it all comes down like to trust, right? If you're working with a broker that you trust and that has access to markets, all of them, uh, he or she should be doing their job, going out to every market, explaining to you why they're not, and just being transparent about the process, right? Because that's what it is. It's just a little bit of transparency goes a long way. So I'm very passionate about this subject because it happens a lot. We compete as brokers, and sometimes I'll see multiple brokers. There's not a ton of people that do NEMT specialize in it, so we come across a lot of the same folks in the space, and a lot of people ultimately are just looking for the best price, right? And I like to have that conversation, explain why sometimes that isn't the case by using multiple brokers. Sometimes it can, but a lot of times it doesn't.
So Rolo had the same follow-up question I had. Can a broker influence the price very much, or is it usually about the same?
Yes and no. And we're talking strictly business auto, right?
Mhm.
Um, yes, to a certain degree. The answer is it depends, and it depends on how low the filed auto rates are with the state and how much wiggle room they have and how much wiggle room that they have and the games that the carriers are playing, right? And that's where knowing the market comes in and saying, hey, wait, you quoted this one, like what's going on here? But there's so much that goes into rating, right? And just asking for discounts isn't going to get you a discount, right? So you really have to know the markets, and because if you're always asking for discounts as a broker, they're just not going to give. They're just going to stay flat, right? You got to know when and how to ask for a discount and call them out at sometimes, because sometimes the pricing will seem a little unfair, right? And you have to go back to them and say, hey, no, this isn't fair, and here's why, and provide them with documentation. So the broker does have some influence, but it's not a huge influence. Hopefully that makes sense.
Yeah. I've talked to many people just, oh, insurance is killing me. Should I switch midterm? Does that ever make sense?
It makes sense when there's like a major issue, um, like the ability to comply with a contract requirement. Say right now you're not contracted with Call a Car, and you're like, I want to become contracted with Call a Car, and they're like, well, no, you need $1 million in SAM coverage, and you're like, oh, well, I'm going to go back to my carrier and see if they'll give me $1 million in SAM coverage, and the carrier says, nope, we don't offer. That's a good reason to switch midterm. Um, Carriers, at least recently, they haven't showed a lot of interest in just switching midterm for pricing alone. Just being honest. If we come back and say, they're just wanting to switch for price, a lot of times they'll come back and just flat out say, no, we're not interested in doing that, or it's not a priority for us. Check back with us later. We're busy, right? And we get that response a lot when it comes to price. But if you have a true contract issue, and a lot of times there are contract issues, right? These contracts are very specific on what they need, especially if you have your motive care and your call a car or your MTMs, your ones that want to be included as additional insureds on your policy. I think it's worth taking a deeper dive and seeing if we can get creative, switching the term.
And I believe you've talked about like how workers' comp is a little bit different in terms of the midterm switches because of like the split mod thing. Can you explain that to people who might not be familiar with it?
Yeah, well, a mod, an X mod is your experience mod, which basically in workers' comp, think of you're a new company, you have something called your X mod is at 100. Anything over 100, you're looked at as less favorable. Anything at under 100, you're looked at as more favorable. And that number is directly tied to your rates. So when you switch midterm on workers' comp, you split your X mod into two, and you might have one X mod that says 110 and one X mod that says like 86. And with that, the carriers then have a hard time rating you. They don't know how to rate you. They're just like, we don't know whether rated at 110, 86, do we split it in the middle? And it creates problems, and it always, now you have a story, right? You have to tell a story. Why'd you switch, right? I just had one that called me the other day and wanted to switch midterm. I basically told him, hey, here's the pros, here's the cons. we don't advise of it for this reason. You're going to have to tell the story for the next 5 years because that's how long it's going to stay on. That's how long it's going to stay, right? And we're going to have to tell the story every single year on why you switched. It's honestly looked at, the underwriters look at it as a blemish. I'm just going to be honest with you. So obviously, if someone really wants to do it, we'll do it, but we try to advise against it most times.
Interesting stuff. So, realize we're wrapping up on time here. I want to briefly touch on like the NEMT market right now, and I'm curious, sort of, there's like the cardigan accredited situation, a lot of stuff going on in the industry. Do you feel like we're in like a hard market, a soft market, in between? What's the current state of NEMT insurance?
Yeah, the cardigan accredited situation, if everybody's not aware of that, they basically were writing NEMT for a while and they lost their program due to losses, right? This happens all the time in other spaces. It just happened in NEMT. If anybody on this call or sees this is been in it a while, before COVID, there's a company called Alano. Same thing happened with them. Just basically went upside down, right? But right now we're in, I'd call it a tight market, right? It's not a hard market. It's definitely not a soft market. It's a tight market. And I think that's where the collective NEMT market needs to come in because we need to keep total claims low, which takes everybody, right? And I don't know if I've mentioned this to you in the past, but it's the law of large numbers, right? It's everybody's losses combined with the premium, and that's what makes a insurance company stay in the NEMT space. If those losses get above what the premium is, or if they don't meet a certain threshold and it doesn't make their shareholders happy and appease them, then they might lose their program. So these carriers are in the business of making money and appeasing their shareholders, and that's not my job, but we want to keep the total industry's losses low. Sorry, I went off in the weeds a little bit.
No, that's important too. Um, if you, I mean, both from your perspective as a broker and also the perspective of an individual NEMT owner, how do you vet a new carrier that's gotten into the space, sounds cool, but you don't want to get burned if they pull out 12 months later?
Yeah. So I think it's looking at their track record, experience in the space, overall stability, not just the ratings. I think just consulting with your NEMT broker and seeing, taking a look at things other than pricing with the coverage, right? If a new carrier comes into the space, what are they doing? Are they subloading certain coverages? Because we'll have carriers that come in, right? Motor's a new one. Came in, pricing looks great, right? But there's certain things on the policy that you have to pick up on your GL policy, which raises prices on that side. So you want to make sure that you know exactly what these carriers are doing, because a lot of times they'll come in and say, "Oh yeah, everything looks good, but look at page 6 of your proposal. We're sublimiting your loading and unloading coverage to $5,000 a claim, right? Which is a huge blow, and you got to pick up that coverage elsewhere. So talk to your NEMT broker about that for sure.
Sure. So wrapping up here, I mean, we can take maybe a few more questions after this, but I want to make sure we cover everything. If you could give every provider like one piece of advice, to walk away from this call with, what would it be?
That's a tough question. I could sit here for an hour and talk about it.
Yeah.
I'm just gonna keep it brief. Focus on hiring good drivers, vetting your drivers really well, good training, and get cameras. I also think incentivizing your employees is very important to stay safe. And then just prioritize getting places safe, right? Everything just is such a rush and a hustle and bustle these days, and just focus on their getting safely. If you're 2 minutes behind, it's okay. We just want you to get there, right? Yeah, those are the things. I would expand on those a lot more, but I know we're kind of pressed on time a little bit.
I mean, we can go a few minutes over. What does incentivizing drivers appropriately look like in your experience?
Yeah, I think monthly raffles, right? Like if say you've had no claims or you've had no write-ups or whatever it is, as an employee, your name gets put into a raffle, and every month they draw 10 names out of the hat, and everybody gets the people that names are drawn. you get gift cards or whatever the case might be. Or, if you've had no claims for the 6 months, you get Starbucks gift cards or whatever it is to make your employees want to drive safe, right? Just put yourself in their shoes. And I've written some employee incentive programs up for NEMT companies, and it's actually done really, really well. Whenever there's money and stuff involved, people want to do a little bit better. Um, so if you have any questions, like I can certainly help with that. I've written a couple.
That's a fascinating topic. Like I actually want to dig into that like
Yeah,
more in the future. We could do another podcast explicitly about like, incentive programs or something.
sure.
In the meantime, so you've shared a lot of really good information today. I really appreciate it. If people want to get in touch with you, what's the best way for them to do that?
Yeah. You just want my information, or are you talking about like what do they need to get?
And like how can people contact you
Oh,
to like, pick your brain, have you be their broker, whatever is helpful?
yeah, yeah. Well, always my number is I can say my number right here, which is 559-241-8963. Or you can email me, John, JOHNK at jgparker.com. And we can probably give that information somewhere on
We'll put it in like the YouTube video.
yeah. Um, and then I think, as soon as we talk, obviously if you want to get in front of everything, have your claims history ready. If you've been in business, if you have no claims, have some letter from a company stating that. Have vehicle lists, driver's lists ready to go, and have some sort of narrative ready. Kind of explaining what your company does, right? Where you operate on it, what you specialize in, your history in the industry. But yeah, I think just starting off the email or a call to break the ice, and
Sounds good. All right, well, John, thank you so much. If anyone has other questions, feel free to chime in. But we've taken a lot of questions throughout the call.
absolutely. I'm also happy to if anyone on this call doesn't want to ask here, you can also email me. You could text me on that number. Happy to text, or if you call. Happy to answer anything.
Good. All right, well, John, again, thank you so much. This was super helpful, and I'm excited to share this video with everybody.
Of course. All right. Thanks, James. Thanks for having me on. Appreciate your time.